Hi, I'm Lance Roberts. Welcome to 3 Minutes on Your Money. Let's talk about corporate debt. Jerome Powell just recently gave a speech talking about subprime debt is contained, well, at least on the corporate side. You know, one of the issues with subprime debt and going back to the mortgage market was that it was an issue of low interest rates that spurred risky lending. Of course, after the last decade, we've seen risky corporate debt now growing to almost twice the level of what we saw with subprime debt back in 2008. Now, you'll remember, back in 2007, early 2008, Ben Bernanke gave two speeches talking about the issue of why subprime debt was contained. He talked about the fact that given fundamental factors that subprime wouldn't affect the broader market. In 2008, he said that subprime debt was contained relative to the overall economy. Wouldn't be an issue. Of course, we found out later that wasn't actually the case. And in recent public discussion, Fed Chairman Jerome Powell said exactly the same thing, talking about the issue with corporate debt, even though elevated, doesn't present the risk to the financial markets like people currently believed, wasn't akin to what it was in 2008 with the subprime mortgage market. In other words, corporate debt is currently contained. But is that really the case? Because when we talk about corporate debt, currently corporate debt in the last 10 years has exploded since the financial crisis because of 0% interest rates. Corporate debt has now risen to levels that we haven't seen. It's been an explosion with growth in BBB rated debt has gone up to more than almost $3 trillion. Now that's BBB. That is just one step above junk. And as Michael Leibowitz recently just discussed, the issue with this is that a large portion, 50% of these BBB rated bonds are subject to being downgraded to junk. To put that into perspective, that would suggest that the subprime mortgage market in 2008, we're now talking about a corporate bond issue of greater magnitude currently if that slide to junk occurs. Of course, that was also the issue with Ben Bernanke, who mistakenly believed that we had entered into a Goldilocks economy. Of course, this reminds me of the movie Speed, where pop quiz hot shot, there's a corporate junk bond bomb on the bus. Once the economy slides towards zero, the bomb is armed. If Deutsche Bank goes bust, it blows up. What do? Well, what we're doing right now for our clients is that we're lengthening duration, we're improving credit quality, and we're shoring up the risk in our bond portfolios. What are you doing? You can find out more about this and read the entire article on our website at realinvestmentadvice.com. Just click on the article right there next to the 3 Minutes on Your Money. Subprime debt is contained. Thanks for watching 3 Minutes on Your Money. We'll see you next time.